All right, in the middle of everything else, you're seeing oil prices sliding away here, multi-year lows, as the concern about the global economy begins to percolate here, that maybe the demand just isn't there with the supply, and that those prices could go prohibitively lower. The president and the CEO of the U.S. Chamber of Commerce's Global Energy Institute, I should say, Karen Alderman Harbert, with us right now. Karen, thank you for taking the time.
Nice to be with you, Neil.
What is going on? Just when we seem to get our footing in oil, kabloom. What goes on here?
Well, I think you're right. I mean, there is some concern about a global economic slowdown. Not here in the U.S. I mean, we're doing just fine, but, you know, around the world. But I think you're also seeing something very interesting. It's the diminished power of OPEC. I mean, OPEC announced a cut. It couldn't do on its own. It had to go look to Russia to help it along. And what that means is that we now have a lot of power in the global oil market, and we're going to continue to produce because our energy industry here has found a way to be really efficient at producing oil. We can do it at lower price points. They're still making money, and they're going to take advantage of continuing to take market share away from OPEC and Russia.
So at what point do they stop making money or as much money? And I don't know whether it's at $50 a barrel, $48, $47 a barrel, but we must be getting close, or are we?
Well, and it depends on where you are in the United States.
Sure.
Some places it's 30, some places it's 40. You know, some really hard places it's more like 50. But, you know, they took a really big hit when oil went to 30 before. They learned a lot. They invested in technology, and they're using it. And they're using it to our advantage. I mean, it's really interesting to think about the fact that Texas today is producing more oil than 3 of OPEC's members: Venezuela, Iran, and Iraq. I mean, we're really reaching, you know, global energy superpower status.
Well, where do you stand on this? I mean, I understand the draw when, you know, better than, you know, a dozen states right now feature $2 and under gas. 31 are within a couple of pennies of that. That's great, you know, for consumers, but there is a limit, right?
Well, there is a limit. Consumers are benefiting. It's the holiday season. A lot of people are going to be driving. That's a great thing. It's stimulative to the economy. But you're right. I mean, the energy business is a fundamental underpinning of our economy. It's what is attracting new industries here from all over the world. Natural gas prices in the United States, not gasoline, but natural gas, it's about 4 times cheaper here than it is in Europe. That's the reason why some of European heavy industry is moving here. We got wide open doors. But there is a point where the industry will start to pull back a little bit. We're not there yet. But, you know, if they can still make money, they're going to produce. And those higher priced, you know, countries that are producing oil at a higher price are going to cede some market share to us. And that's great for us. That reduces our trade deficit that the president's concerned about.
All right, but, you know, I always wonder about this Saudi Arabia threat to curtail production. I know it, and the Russians looking to do the same. I don't know if they made good on that, but I know the effect last week. There was a temporary $1.50, $2 a barrel pop in oil, and it's since dissipated. What do you think the Saudis are going to do?
Well, I think the Saudis, you know, are going to act in their own interest, as they always do, which is to pull back a little bit. They have very efficient production. And all of OPEC, they can produce at the cheapest. So they'll pull back a little bit, trying to hope the price comes up. But if nobody else cooperates and Russia really doesn't live up to what it said it was going to do, and we continue to produce, they really do have diminished capacity to be the price maker in this market these days. That's a dramatic change of events for this country.
What I see happening, though, if we're the one economy that's doing okay, I'm not saying exclusively, but among the major powers, that certainly seems to be the case, we can't carry the ball for the world on this, right? So if the world is weakening or slowing down, if China is ebbing and Japan is ebbing, and what we see in much of continental Europe, beginning with Germany and France, they're slipping, that's going to offset what's happening, right? I mean, and prices will go still lower, right?
Well, prices could go lower, but we also have another limiting factor that is sort of self-inflicted wounds here, which is we are, you know, the subject of this big anti-environment, anti-energy activist movement that is preventing us from building infrastructure to move this stuff around the country to export markets. If we can't export it, you know, then we ultimately won't get it out of the ground here. And that is the whole point of these, you know, fractivists and anti-energy activists, which is to prevent us from being and exploiting and using to our economic advantage this abundant resource. Look, the world's demand for resources over the next 30 years, fossil fuels account for 80% of that. The choice for us as a country is how much of that growth is going to be ours. It could be up to 25 to 50% of that growth could be met by our own resources. That's a terrific news for our economy, as long as we weather these short-term, medium-term bumps.
As long as we weather them. All right, Karen, thank you very, very much. Good catching up with you. I appreciate it.
Good to see you.